Let's refocus now on currencies. In fact, the Aussie having its best day in almost a month after a rebound in commodity prices. So let's get more on this. Nick Twidale joining us from FP Markets. Nick, good to see you.
Thanks very much for having me.
All right. So is this, though, a US dollar story?
I think it's a bit of both, isn't it? We saw a decent bounce in commodities and the dollar got hit across the board and has done for the last couple of days. But I'm going to bore you again and just say we're looking ahead at Jackson Hole. And I think that's going to be the big driver for most of the currencies looking ahead.
Yeah, because history will tell you that it tends to be a market-moving event. Certainly been the case in the last few years, I guess, ever since COVID. But what would we really expect? Is it simply a case that Jerome Powell's likely to double down and say, I guess maintain a hawkish tone and leave that door open to another rate hike?
I think so, and I'm sort of leaning on that way. And I think we follow the market. We look at what US yields have just done in the last 3 to 4 weeks. We're hitting sort of historic highs again, back to 2007 in the 10-year. And looking how the dollar's appreciated as well. I think that's the way the market's leaning. We've sort of had a fantastic first half of the year or even longer than that, and stock markets have rallied nicely. And then we've seen probably a little bit of reality come into the game over the last couple of months. And from a currency perspective, the poor old Aussie's been a real recipient of a bashing on the front on that side of things. Plus, of course, for the Aussie, we're looking at China. Numbers coming out of China, real and imagined, not particularly great at the moment. We're looking for further stimulus from China. We didn't really get it. I think they are adding bits of stimulus, but they're coming in a more sort of realistic measure than we normally expect from China. It's not as hard and fast, and the Aussie suffers a lot when we're seeing those sort of conditions. So it really is a big event, Jackson Hole, for most of the currencies, including the dollar. And I think you're right. We're now expecting Jackson Hole to give us that forward guidance for the next 6 months from the Fed.
Yeah.
So it's crucial for all of us, and we're sort of sitting on our hands a little bit, waiting for the next few sessions to get through.
Interestingly, it comes as the latest data out of the US and Europe overnight with those composite PMIs showing weakness there. So how do you think, does that change the story at all?
They do. I was sort of, I'm not discounting what we're getting from the PMI, but I don't normally put as much emphasis on what we get from PMI. And part of me feels it's a bit of a slow news week. We've had Nvidia and we've had the PMI, and that's pretty much it. And we've got Jackson Hole coming, so they were disappointed.
So investors are looking for a catalyst.
I think so, yeah. And we've seen sort of volatility mainly on the back of Nvidia, if you look at it. And then last night we saw decent volatility in the currencies as well. First we had European numbers, and then we had UK numbers, and then we had the US PMI, all disappointing. So they're a piece of the jigsaw puzzle, but I don't think they're as big as what we're going to hear from Jerome Powell and the forward guidance that we get over the next few days. So I think it's like a blip that we've seen, and I'm probably going against the tide at the moment. But some of it is, as we know for the market, is we're looking for that catalyst, and there's not much. We're not getting too much from the market this week. So numbers are coming off. I think that's true. But the bigger picture for the Fed, I think we're still going to lean on that hawkish side of things. I think there's one more out of them ahead of Christmas, and whether it comes in September, I don't think so, but maybe November. And because of that, I expect to see, if we get those conditions, I expect to see the dollar probably get back into that grind higher that we've seen against most of the currencies. And probably the Aussie will suffer, the Euro will suffer, especially after last night's data, and cable as well.
Right. So what, potentially the Aussie could plumb new depths, do you think?
I think so, yeah. I think we're starting to get to those historic fair levels in the Aussie, and that's sort of in the lower 60s. But as we've seen in the past, it can dip beneath 60 cents. It can go even further. The conditions we get over the next 3 to 4 months are really gonna see where we go for the Aussie. And unfortunately, I think it's a bit of a sell on rallies at the moment.
Is it also come down to that rate differential we're seeing between the US and Australia at the moment, with perhaps consensus growing that we could be at a terminal rate right now for the from the RBA? Whereas, as we've talked about, perhaps they could still go higher in the States.
I think so, yeah. We're always looking at interest rate differentials for that underlying trend in currencies, and that's probably the way of it for the Aussie at the moment. Whether things change dramatically, it doesn't look like we're going to get that from the Fed, but I think we've hit that peak for the RBA.
And when we talk about China and that incremental stimulus that we're seeing, which has frustrated the market, and we have seen that pressure on commodities, I mean, if it comes to it and they decide to bring out the bazooka, Is that going to be the game changer for the Aussie, do you think?
It could be. I mean, it depends how big the bazooka is and whether they move up to a tank, I suppose. It's one of those things. But short term, as we see from any sort of government stimulus, we will get a short term knee-jerk reaction. If it is going to be concerted from China, then that will certainly help the Aussie, and that could be what rescues us, or the Aussie bulls, I suppose. If we don't see that, if we're seeing what we're seeing from China at the moment, which is incremental stimulus, then I think it's still a sell on rallies for the Aussie, especially against the dollar.
Yep. All right. Any other pairs that you're finding attractive at the moment?
I think everyone's got to be looking at dollar yen at the moment.
Yeah.
So once again, it comes back to that interest rate differential. It comes back to what we're getting from Japan and conversely what we're getting from the US and the Fed. We've seen fresh highs. Here's the chart. We've dropped off recently. The great thing about dollar yen as well, for a trader's perspective, we do get volatility a lot. When we get into these levels just beneath 150, we start hearing talk of intervention from the Bank of Japan as well. So things get a little bit interesting, but it's been trading, as you can see from that chart, there's some really whippy moves in there. So if it does provide good trading opportunities, but the trend is definitely up, and like the longer dated chart will show you. I think I was trying to bring it out, and there you go. It's like since sort of back to Q2 2021, and I think that's when we started to see the Fed coming through. We've seen a clear good upside trend in dollar yen.
What about the euro?
I think it goes down.
Yeah.
Let's
bring up the chart.
Yeah, I think once again, it's easy for me to say we've seen a really good move back down from what we saw in middle of July, and that's been dollar strength across the board against all the majors. But numbers out of Europe again were disappointing yesterday. I know they were disappointing in the US, but I think the ECB will react quicker and harder than the Fed, and that interest rate differential side of things will come in. It's going to be very interesting. We're talking about Jerome Powell at Jackson Hole, but Christine Lagarde speaking as well. So we could have that sort of vicious storm for Euro bulls if we get the ECB talking rates down and the Fed sort of talking them up, or certainly keeping them higher for longer. It could turn into a bit of a no-brainer for currency traders.